Introduce you with Mohamed BADRI and me, Clara Battut, the international financial statements analysis of Orange and Verizon. About the telecommunication industry. The telecommunication sector is made up of companies that make communication possible on a global scale, whether it's through the phone or the internet, through airwaves or cables, through wires or wirelessly. These companies created the infrastructure that allow data in words, voice, audio, or video to be sent anywhere in the world. Orange is a French telecommunications company. In 2019, the company is the leader of the second operator in 75% of the European countries, where it's established, and in 83% of the countries in Africa and the Middle East. In 2019, Orange achieved a turnover of 42 billion euros for all of its activities and had 266 million customers worldwide, including 201 million mobile telephonic customers and 18.2 million broadband customers. Orange is expanding its activities to online bank, sell content, e-commerce, online advertising, home automation, and remote assistance. Verizon is the largest carrier in the US. It holds up to 40% of the US market share, which is generating the highest margin and return on capital in the industry, especially after launching its latest product, which is 5G. Being an American company, Verizon uses the US GAAP for its financial. Now we calculate the financial ratio. For the liquidity ratio, it assesses the company's ability to meet maturing obligations as they become due and have funds available to deal with unexpected needs or opportunities. We will calculate the current ratio, which is calculated by current assets divided by current liabilities. It measures the ability of a company or an individual to pay its debts in the short term. So we can see that the current ratio of Orange is 0.9 and the current ratio of Verizon is 0.8. This ratio must always be greater than 1. The higher it is, the greater the latitude a company does not have to develop its activities. Difficult for this case, there is a difficulty if its creditor asks to be paid immediately. Expects in a special circumstance, a ratio less than 1 means that the working capital is negative. The two companies' short-term liabilities can cover the short-term assets by borrowing just a small extra, compared to 0.01 as for compensation, since the ratio needs to be equal to 1 for 100% covering and without excess. In other words, the difference can be borrowed on the very short term.
We calculated one based on margins and the other one based on returns regarding shareholders' investment and how much do they get out of their investments. Well, let's start off with the first profitability ratio, which is the margins. Well, as we all know, this ratio is calculated by dividing the net profit on the total revenue. Well, it's just to show how the company will subtract the cost of their sales from the total of sales they managed to do in the fiscal year in order to know the net profit that the company is able to raise, to get. Well, for Verizon, here we see a net profit margin of 0.14, which means that it has an excess on, it doesn't cost the company more than what it sells for. So they still manage to get profit out of it. Same for Orange, 0.065. Well, we can see it as like for every investment they get 0.06 excess profit on it when we subtract sales cost of sales. Second ratio is based on returns. So ROE, return on equity. The formula is known. It's the net income. Net income is all the incomes that the company generates minus the costs of it. And we take this net income and we divide it by the average shareholders' equity. So, because income is also comes from the shareholders' initial investments. So this ratio allows us to know how much the shareholders got back on their investments for the companies. So here we see that Orange has a return on equity of 0.157. So for every investment, they get 0.1 more on return on their investment. Same thing for Verizon. Whereas Verizon we have 0.3. So shareholders investing in Verizon get more a more attractive return than the Orange shareholders' equity, shareholders investors. So it's mainly due to the size of the company and also how they manage. Now we move on to activity ratios. So activity ratios is the total asset turnover. We take the total revenue and we divide it by the average total assets. It's to know how much profit do we get out of our assets. So here, on a 950-day basis, we can see that Orange has a total asset turnover of 0.39, and Verizon on a 807-day basis, we can see that they have 0.45, which means that the assets of Verizon are more profitable and they generate more profit, and also on a smaller time lapse than Orange does. As for solvency, we calculated the debt to equity ratio. This is a ratio that indicates a lower amount of financing by debt via lenders versus funding through equity via shareholders, of course. So the higher the ratio, the more the company is getting more of its financing by borrowing money, which is subject to the company's potential risk if debt levels are too high. For our examples of Verizon and Orange, we can see that the debt to equity ratio for Verizon is 1.64, which means they tend more to get money, their funding, from investors than borrowing. Still, they borrow, but on a much lower level than Orange. Orange has a debt to equity ratio of 3.12, which means that they tend more to borrow from banks than sell shares to shareholders. This has, as I said before, a higher risk for the company. If the debt levels are getting too high, eventually the company will get at a point where it can't pay back the money, and it will go straight to bankruptcy. Here we just cited some points of divergence between Orange and Verizon in terms of financial reporting, since one is using IFRS, which is Orange, and the other one Verizon US GAAP. So in terms of valuations, the inventory, Well, for inventory, Orange uses FIFO, first in, first out, for stock evaluation, because last in, first out is not allowed on the French territory. Verizon, on the other hand, uses LIFO, last in, first out. Reversal of inventory is allowed for Orange, whereas for Verizon, because it's not allowed on the US GAAP. For Verizon's US GAAP, we can see that ASC 606 states that all taxes that are collected from customers are reported on a net basis. And on a bigger picture, we can see that Verizon's US GAAP is a rule-based reporting, whereas IFRS is a principle-based reporting. And as a conclusion, we hope that in the future there will be a unified form of reporting, regardless of the location of the company, because economical activity is really comparable and same for all of the world, because we have a world market. And for now, companies and the accounting associations, they try to reduce the differences between IFRS and US GAAP, and maybe their goal is to have and to harmonize reporting and financial statement presentation to be unified for all the companies around the world. And thank you for your attention.